Okay, so what's happened since then? So we closed the investment in probably April 2009. So we put the new systems in. So new point of sale, so that's kind of till software, multi-site e-commerce platforms, so that's to enable us to sell on the internet from multiple stock locations, which is the complicated bit. That went live about this time last year. Still lots of work to do. I think running a website's always, particularly when it's not our core business, it's difficult sometimes to concentrate on it enough in order to get it as good as it should be. There'll always be work to do on the website. Second site, which is in South Kensington. It took almost a year to find and negotiate the deal on it. I suppose you're always, it was surprising because we thought it would be easier than the first site. It was actually much, much more difficult than the first site. But we were much more demanding. So suddenly we had cash in the bank. We wanted a big site that was centrally located, and we didn't want to pay a fortune for it. So it took us quite a long time to find.
How do you decide on where to open that site?
It's really a combination of a couple of things. It's about the demographics of the area, just looking at the density of housing and the wealth of that density, and then looking at competition. So you're just looking at how well served that local area is. And then it's really down, actually, like most recent business, it's down to the physical site itself. So down to what things like parking access or how easy it is to get licensed, just lots of specifics.
From what I understand from all that you've said, there's a fair amount of stickiness to most of the customers. It's likely that the customers are more loyal. In that case, why not just keep it in a place where, like the shopping mall, where you have hundreds and thousands of people walking through the place?
Well, it might work in that, but how do people get to the shopping mall? They drive, and then you're encouraging people to drink, and before they drive home, it also, people don't shop. If our customers generally will shop with us in the evening when they come home from work for a bottle for dinner, or they'll shop at the weekend when they want to buy a case of wine or a number of different wines in order to have over a period of time. And it's an experience itself. They come to a shop to taste the wines and then buy some. You don't really do it as part of the larger retail. You don't do it as a shopping day out, generally. So we opened in October last year. It's already trading reasonably strongly. It didn't start off incredibly quickly at the end of last year, which worried us a little bit. But actually this year has been, the last couple of months has been really good. So it'll be cash break even this month, and hopefully properly profitable in the next maybe 2 or 3 months after. The relationship with investors has generally been pretty good, although not very useful, if I'm honest. So one of the things that I always enjoyed as being a VC was actually that, particularly when it came to things like discussions about financing, you could actually give some good advice to the companies and change, whether it's looking at the amount of money to be raised or the kind of people that you could go and approach, all that kind of strategic advice stuff. You don't really get it, if I'm honest. We get someone who comes to the board and asks some questions, but doesn't really challenge us, I suppose, in a way that I think a good board should work. I think there should probably be more challenging than actually advising quite often. Even investor 3 is becoming easier to deal with. I suppose this is, as much as something else, once you hit your numbers for a while, people will get to relax a little bit and just get a bit more comfortable that we're not going to lose them. So next steps, now it looks, as of last week, it looks like Oddbins is about to hit the wall. So that's the last remaining high street wine chain. Again, it's a terrible business model. I mean, they're just selling the same sort of crap that the supermarkets sell, but with higher prices and with less convenience. So surprise, surprise, it's probably going to go bust. I mean, it looks like it will be they closed 30% of the stores this week, and I suspect they'll go into liquidation in the next 2 or 3 months, or something like that. So we've been approached by a few people that we know and actually that we spoke to in the first process to see if there might be an opportunity to go out after some of their better sites. And that's quite complicated because you've got 2 deals to do. You've got a financing deal to do in order to get some capital into us, in order that we could go out and do a number of sites at once. And secondly, you've got to get the deal done with the administrator for the Oddbins in order to get the leaseholds organised. So it's quite risky and quite probably unlikely to be successful as such, but often these kind of deals are. So we'll need additional finance for that, and so the merry-go-round, so beginning with I don't know whether we'll use corporate finance this time around, but we'll start our meetings with investors in 2 days' time. So just to see where we get to with that.